Just 1 minute ago, Bank of America triggered an emergency alert so severe it has shaken the entire U.S. banking system. Most Americans have no idea what this means for their money. But Warren Buffett just released a survival plan that could save your savings and investments. If you have a bank account, credit card, or mortgage, the next 60 seconds could change everything. Asterisk, just 1 minute ago, Bank of America issued an emergency alert that immediately caught the attention of customers and the financial world alike. The alert was triggered by sudden irregularities in transaction processing and internal systems, signaling a potential liquidity strain that required immediate action. Operations were quickly affected, with some online banking services temporarily frozen, ATM withdrawals limited, and customer service lines overwhelmed by anxious clients trying to understand the situation. The alert caused instant concern across branches nationwide, with employees rapidly implementing emergency protocols to stabilize daily banking functions. Social media erupted within minutes as news spread of the alert, with screenshots of notifications and reports of system slowdowns going viral. Analysts quickly began dissecting what this meant for the broader banking sector, linking it to potential exposure risks and operational vulnerabilities. The speed at which the alert spread amplified panic, highlighting just how fragile confidence can become in moments of unexpected financial stress. News outlets picked up the story almost immediately, creating a domino effect that reached investors, regulators, and everyday Americans alike. Customers across the country began checking balances, transferring funds, and seeking clarity on whether their accounts or deposits were at risk, even as Bank of America tried to assure the public that systems were being stabilized. The rapid viral spread of information created uncertainty and speculation, making it one of the most significant emergency alerts in recent banking history. Warren Buffett reacted immediately to the Bank of America emergency alert, emphasizing that this is not a typical banking issue and urging Americans to pay close attention to their finances. In a brief but firm statement, he described the situation as unprecedented, noting that the speed and scale of the alert caught even seasoned investors and regulators off guard. Buffett highlighted that while banks have faced crises before, the combination of system irregularities, operational freezes, and the rapid spread of panic signals a new level of financial vulnerability that ordinary Americans cannot ignore. He warned that many people underestimate how quickly access to funds could be affected in these circumstances and stressed that proactive measures are critical to safeguard savings and investments. According to Buffett, those who remain uninformed or reactive could face significant challenges, while those who act decisively and follow prudent steps may navigate the disruption safely. He advised monitoring account activity closely, avoiding panic-driven decisions, and reviewing exposure to financial institutions that may be impacted indirectly. Buffett also underscored the importance of diversifying assets and being aware of liquidity risks, reminding viewers that even established banks are not immune to operational shocks. His message carried urgency, signaling that this alert is more than a temporary inconvenience and that ordinary Americans should treat it as a wake-up call to assess their financial preparedness and respond strategically before conditions worsen. The Bank of America emergency alert triggered immediate panic among account holders across the country, with customers rushing to check balances, confirm pending transactions, and secure access to their funds. Some experienced temporary restrictions on withdrawals and transfers as the bank implemented emergency measures to prevent further system strain, leaving many confused and alarmed. Social media became flooded with first-hand accounts of disrupted online banking, blocked ATMs, and delayed payments, with screenshots of alerts and notifications shared widely, amplifying fear and speculation. Forums and financial groups erupted with questions about whether deposits were safe, how long the restrictions would last, and what contingency plans individuals should follow. Many customers began seeking advice on alternative financial solutions, including moving money to other banks, using cash, or liquidating investments. While influencers and financial commentators weighed in on potential long-term implications, the rapid spread of information on Twitter, Facebook, and other platforms created a sense of urgency, with trending hashtags highlighting widespread concern and uncertainty. Employees at branches reported heightened tension as anxious clients demanded immediate answers. Further straining operations, the combined effect of restricted access, real-time panic, and the viral nature of social media coverage made the alert a high-profile event that dominated both public conversation and financial analysis for hours, showing how quickly confidence can erode even in established banking institutions. Warren Buffett outlined a clear survival plan for ordinary Americans in response to the Bank of America emergency alert, emphasizing practical steps to protect savings and maintain financial stability. He advised individuals to diversify their assets across multiple banks where possible, ensuring no single institution holds all critical funds. Buffett stressed the importance of keeping a portion of savings in liquid, low-risk instruments such as treasury bills or insured deposits, allowing easy access during periods of uncertainty. He also highlighted industries and assets that historically perform well during financial turbulence, including essential consumer goods, utilities, and long-term blue-chip investments, noting these sectors are less likely to face sudden operational or market shocks. For short-term security, he recommended reviewing monthly expenses, reducing unnecessary debt, and maintaining emergency cash reserves to cover immediate needs in case of banking disruptions. Buffett additionally suggested monitoring bank communications closely, staying alert to regulatory updates, and avoiding panic-driven decisions that could exacerbate financial strain. He cautioned against making hasty investment moves based on fear, instead advocating for measured, informed actions that protect both personal and family finances. By following these steps, ordinary Americans can navigate the current banking crisis with greater confidence, reduce exposure to risk, and position themselves to respond effectively to ongoing financial developments. The Bank of America emergency alert is not just an isolated incident. Analysts warn it could trigger ripple effects across the entire U.S. banking sector and beyond. Other major financial institutions are now under scrutiny as investors and customers watch for similar vulnerabilities that may emerge, creating a heightened sense of caution in the markets. Stock prices for banking and financial service companies experienced immediate volatility, with trading floors reacting to speculation about systemic risk and potential contagion. Analysts are highlighting the interconnectedness of modern banking systems, where liquidity pressures, operational disruptions, or sudden freezes at one institution can quickly spread to others, especially those with similar exposure to deposits, loans, or high-risk assets. In the days following the alert, economists are predicting continued market sensitivity, with possible short-term declines in major indices, increased volatility in bond and currency markets, and heightened investor anxiety regarding bank solvency. Attention has also turned to credit markets, where companies dependent on short-term financing may face tighter borrowing conditions, forcing them to reconsider operational plans and liquidity management. Globally, the alert has drawn the attention of foreign regulators, investors, and financial institutions. As questions arise about the stability of the U.S. banking system, a pillar of global finance, international markets are monitoring the situation closely, with emerging concerns that the uncertainty could impact trade financing, foreign investment flows, and commodity prices due to risk-averse behavior. Social media and financial news outlets have amplified these concerns, providing real-time coverage that spreads both information and speculation worldwide, adding to market nervousness. Experts are urging caution while emphasizing that the situation is evolving rapidly, advising that businesses, investors, and ordinary Americans remain vigilant and prepared for possible secondary effects. The combination of operational disruption, customer panic, and the perception of risk has made the alert a focal point in global finance, highlighting how fragile confidence can become and how quickly localized issues can resonate across domestic and international markets. Warren Buffett's warning highlights the seriousness of the Bank of America emergency alert, showing that even major financial institutions can face sudden and unexpected crises. Americans are urged to stay vigilant, monitor their accounts, and take immediate steps to protect savings, investments, and financial security. This includes reviewing monthly expenses, maintaining emergency cash reserves, and diversifying assets across safe options to reduce risk. Ordinary account holders should pay attention to bank communications, regulatory updates, and expert guidance to make informed decisions during this volatile period. Next, we'll cover ripple effects on banks, markets, and global finance. With expert strategies to navigate this uncertainty, stay alert, stay informed, and be ready for what's coming.